queries then. We have a couple of them lining up for us, and let me inform all of our viewers that we are live on all social media platforms, as well as we are you can write in to us on WhatsApp as well. We have the number flashing on the screen, so do write in to us your queries. Do mention your name, the stock that you want to talk about, and also the time frame that you're looking for, whether it's a long-term horizon or a short-term one. So let me going with this query that I have, and it is from Neha Toteja, and I believe it's on EIH. She's saying that she's bought this counter at the level of 157 rupees per share, making an 18% loss on this one. So she wants to know whether she should average now or wait further for correction. Holding time is 3 to 6 months, and if not, then which other stocks she can look at investing. Kunal, what's your take on this one, EIH?
So the stock has come back towards its 200 moving average. Correction has also panned out quite well for the stock compared to the other names, Indian Hotels, etc. Even the stock has gone into a decent correction for itself. So price-wise, very attractive at 127, 28 odd levels that you can look to average. But if you're looking for a better alternative, I would suggest probably look at stock like Lemon Tree. I think that's been a more resilient stock, and compared to the other formidable names in the hotel space, I think this stock has been more stronger in terms of price action. So at 59 or 60 odd rupees, you can probably look at betting on Lemon Tree and keep on holding your existing holdings for EIH.
All right. Shrikant's got a question for you, Avinash, and good morning to you from my side. NTPC is the name of the counter that he wants to know about. He's bought at levels of 173, and he's got 470 shares of this counter. He's added as of now. He's asking whether to sell at this juncture or keep holding.
Yeah, good morning, Alex. I think NTPC, Alex, he can continue to hold on. Our sense is that, power generation as a theme is going to play very strongly in the coming year, that is FY23. Not only the volume of throughput, but the tariff, rates are expected to go up in the coming 12 months. And I think this should benefit NTPC quite significantly. Power utilities are now being increasingly favored by investors, considering that most of the industrial sectors are now coming back to normal. There is a kind of a pent-up demand, from other consuming sectors, and therefore I think going forward, FY23 should be a lot better compared to last year. So I would suggest him that he should not sell out at the current levels. Probably wait for the next 6 to 12 months. He could get a better risk reward in NTPC.
All right, this one is also for you, Avinash, and this one is coming from Indumati, and this is on Sharda Cropchem versus Sumitomo Chemical. Which is a better play that she can look to buy over the longer term, and if none of those two, then which in the agrochemical space can she look at?
I think Sharda Cropchem, both are good companies, but I think in terms of valuation comfort, I think obviously Sharda Cropchem looks better. Their fourth quarter numbers are also very strong, and I would presume that FY23 could be a lot better. But both these companies have a different business model. Sharda Cropchem is a largely outsourcing model, and Sumitomo is a fully integrated player. So I think, considering the fact that Sharda Cropchem offers a better risk reward, I would believe that, if she can obviously opt for Sharda Cropchem, she could get another 15-16% even from the current odd levels. But overall, this space looks very interesting, and I think any dip here should be used as an opportunity to accumulate such kind of agri stocks in the portfolio.
Cropchem doing quite well for itself today, gaining over 4%. Madhav Kurup is writing in from Kerala, and he's asking about RCF, Rashtriya Chemical Fertilizers. He's been holding onto the stock from levels of 93. Kunal, he's asking whether he should average or should he book losses in this counter.
So I think the stock, if I'm not wrong, is at 93, 94 levels, which means you are almost at parity or at par with your cost price. The other way to look at it is that whether the stock price trend has been damaged in the last 1-2 months of the market volatility. And surprisingly, that this stock and the space, fertilizer space, has done reasonably well for itself. Yes, the last couple of days, there have been a bit of hiccup in between for the trends, but then largely these stocks have remained more resilient and outperformed. So I would suggest that you should hold on to your positions on RCF, and my sense is that if the market gets into a stabilization phase, and RCF should break past about 110, 120 levels, so that should be a positional target which you can keep an eye, suggesting a hold.
Okay, this one is also for you, Kunal, and Amy wants to know whether we can expect HDFC Bank to fill its gap between 1430 and 1460 in this bounce.
So there is a high degree of possibility that the stock can do that. Now, I think there are two ways to look at it: that whether the price action has gotten a bit more stronger, whether there is demand chasing the stock price right now, which indicates that the stock should break past, not just fill the gap, but even break past above it. Bank Nifty started to outperform. Large cap private sector banks, the ones which are underperformers in the previous cycle, like the likes of Kotak Bank, HDFC Bank, they've started to get into the thick of price action. So that's a positive sign overall. And momentum begets momentum. So if you see a stock breaking out and the market cycle also turning, that's generally a positive for stock prices. So my sense is that yes, the stock should at least try and fill the gap of this 1400, 1450 mark, but it could also go beyond that as well.
Okay, Avinash, coming to you on Mindtree, we've got Nagakumar from Hyderabad who's asking this question. He's holding at levels of 3,500 Mindtree. And of course, you have to take into account the merger with LTI. He's asking whether he should hold for over 2 years.
Yeah, I think Alex, considering that Mindtree is now going to be merged into LTI, and I think it's going to be a very solid merger, considering that both the companies would benefit, from their own synergies. I would expect that over the next 2 years, you could see the real impact, in fact, the full impact of this consolidated merger coming out. In fact, the stock has been slightly tipped because after the merger, the stock saw a lot of profit booking. But if the investor has got a 2-year view, then I think he should wait for the merger to culminate, and the benefits of the merger could obviously be realized in the next, say, 12 to 18 months. So continue to hold on, and definitely I believe some better growth can be expected in both FY23 and 24.
All right, this one is coming from Sagar, and he, I believe, wants a fundamental view on this one. He's asking whether do you see Asian Paints and Berger Paints market share decrease, as it was a duopoly in the market, but will the prices see a correction even more going ahead, given what is happening right now in the paint segment as well, and with Grasim going ahead and actually expanding its capex, especially in the paints business? How do you see the sector, Avinash, going ahead, and what's your view on Asian Paints and Berger Paints in that particular segment?
Yeah, I think clearly competition in the domestic paint market is getting now more and more hotter, and I think Grasim is a very large player. It represents the Aditya Birla Group, and one point which is very important is that they already have a very large presence in the cement and the building product sector. So paints is a natural kind of synergistic product for them. But my sense is, at least for the next 12 to 15 months, I don't see any major disruption in the paint market. Market shares for both Asian Paints as well as Berger Paints are unlikely to go down, because there's a lot of stickiness with the dealer community, with the customer community to remain invested in the older companies, and obviously product wise also dealers like the existing brands. But over the next, say, 1 to 2 years, it could happen that maybe Berger or Asian Paints could lose a little bit of market share. And it's too premature to say whether these companies could actually face the onslaught of competition quite easily. In fact, they are very strong players in the market. So I would believe that if you have those shares, continue to hold on. There's nothing to worry, at least for the next 6 to 12 months. Thereafter, of course, we'll have to pick and choose how things go forward in the markets.
Okay, we've got a question on IRFC, and I will take this to you as well, Avinash. We've got Bhuvnesh Chug who's writing in, and I believe that this question is for you, but he's got a relatively shorter term time frame on this. He's got allocation at IPO levels, he says, and I think he's losing ground. What should he do based on the fundamentals?
See, I think if you're talking about IRFC, Alex, I think this is a stock which is basically a dividend yield kind of stock. Normally people who don't want to invest in fixed deposits typically go for IRFC, because IRFC has got a very stable business model. Their only customer is the Indian Railways. And I think, the company rewards the shareholders with very good dividends. So obviously, my sense is that, probably, if the dividend is significantly higher, he could possibly benefit by way of a dividend yield. But in terms of capital appreciation, a short-term view on this stock is not advisable, because typically this business is very lumpy. It's a very, simple financing kind of business, which IRFC does with the Indian Railways. So longer term, I think definitely you can make money, but in the short term, I don't expect a significant upside. I think largely he could only benefit because of the dividend yield, which probably could be better than a normal fixed deposit rate. So, in that perspective, he could possibly do a little bit of dividend stripping, and then he could possibly shift over to some other stock.
Interesting concept. I think we should explore it at some point of time. If viewers want to know about stocks that they can buy from dividend perspective that have high dividend yield, then please write into us and let us know, and we'll plan something accordingly.
Absolutely. Let's move on, and let me take this one. This one is coming in from Harish. And Harish is writing to us from Bangalore, and he is asking about Coal India. He's purchased some shares at around 200 rupees per share. And Kunal, he wants to know whether he can expect profits or should he sell now, and he wants a technical view. So basically he wants to know whether he will be able to make some money out of this particular holding that he has in Coal India. What's your take?
See, I think so. For example, to carry forward the point which Alex was making, Coal India is one of the higher paying dividend stocks as well. But then when I look at the charts, the stock is absolutely flat at 180, 190 kind of a range. Yes, there have been wild moves, guaranteeing moves for Coal India, where the stock had moved up about 200, 210, but then corrected also very sharply back towards 170, 175. So it's trying to define a range for itself closer to 175 and 210 to 15. On the higher side. So you can expect that the stock may come back to the higher end of the range for itself, but I would suggest that Coal India and such kind of names should not be in from a, more of a longer term kind of a portfolio. You make your 5-10% odd and then wait out for the stocks to get back into a corrective phase and then buy them back again lower. So I think that's a better strategy for a stock like Coal India.
Okay, fair enough. We've got Rajesh Kakad who's writing in from Punjab. Thank you so much, Rajesh, for writing in. The question that he has is for you, Avinash, and he's got Glenmark Life Sciences at IPO levels, and he's asking whether to hold on. He's a long-term investor, he says. So on the fundamentals, how does this stock look?
First of all, Alex, Glenmark Life Sciences is a subsidiary of Glenmark Pharma, and Glenmark is the parent company for Glenmark Life Sciences. I think after the IPO, definitely the stock has underperformed significantly. And I think good news is that the fourth quarter numbers were quite interesting. In fact, both the operating margin as well as the operating EBITDA has improved quite significantly. The company is a large player in APIs as well as CDMO as well as contract research. And our belief is that over the next, say, 12 to 15 months, the company has got a very healthy order book, which should obviously percolate into a better performance for next year. So I think, the investor should be patient enough to hold on. My sense is over the next 12 to 15 months, one could see a significant upside here because valuations are very, very attractive. And most importantly, they are exporting to all the Asian as well as European markets, which makes, the business more interesting considering that the rupee has weakened. So export realizations are also going to get better. So I think he should hold on. Keep a time frame of at least 12 to 15 months. I think he should definitely not only recover his price, but make a decent profit from this stock.
Okay, this one is from Sukanya Karat, and she's writing to us about City Union Bank, about 100 shares of City Union Bank that was purchased at 189 rupees per share. Wants to know whether she should hold, sell or average. Kunal, what's your take on City Union Bank? The buy price is 189.
See, I would suggest to adopt a dual strategy. So from a short-term play, you can look to hold. The stock is establishing a good base at 120 mark. I've been tracking the stock since last couple of weeks compared to the other mid-cap, private sector banks. The stock is trying to show a lot of resilience for itself. But on the other hand, when I look at the monthly charts, it's not, very attractive to, hold the stock from a longer-term play because the extent of time which could be spent into this stock could, lead to a opportunity loss as compared to the other private sector large cap names. So short-term wise, you can expect the stock to come back towards say 135 kind of a levels. That could be a good point where you can look to start exiting the stock and then shift to a formidable large cap names, maybe something like Kotak Bank, HDFC Bank, or even the likes of ICICI Bank could be better place.
Okay. The next one's on Birla Tyres, and this one's from TRR Rao. He's writing in from Hyderabad. This one's for you, Avinash, on the basis of fundamentals. He's bought at levels of 30. He's asking whether to average at this point or should he book out?
I think, Alex, if the investor has got a slightly medium to long-term horizon, I think he can hold on. But considering the fact that, crude prices have gone up, raw material prices for most of the tire companies have gone up, I think the next 1 or 2 quarters are going to be quite bad. In fact, we've already seen, players like CEAT, players like MRF show very poor numbers in terms of margins and profits. So I would say that, only if he has a 12 to 18 month horizon, please hold on. The good point is that automotive sector is now showing very strong green shoots, and that could obviously help tire companies. So hold on if you have a 12 to 18 month horizon, definitely the stock should do better.
Right. All right. On that note, we'll take a break on this edition of Buy Now, Sell Now. Hang in there, Avinash, as well as Kunal. We will be back with all of our viewers' queries and viewers. Don't go anywhere. Stay tuned. We'll be back soon.
BSE Investor Protection Fund presents ET Now Swadesh Sensex Car Superstar. To participate, SMS now and get a chance to become Sensex Car Superstar. Coming soon, only on ET Now Swadesh.
Love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout the last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday